Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, August 12, 2009. The euro-dollar pair rose overnight, stemming a down move this week that had reached the 1.4090 level in today's overnight trading. The U.S. stocks rallying at the New York Open and traders squaring their positions prior to the FOMC announcement later in the day, the pair rose to test 1.4245 prior to the announcement. Following the Fed, the pair fell in a knee-jerk reaction, falling to the 1.4125 level, which corresponded with a more medium-term line of support. The pair then retraced all of its fall in the wake of the release. In their statement, the Fed reiterated their policy to keep interest rates exceptionally low for an extended period of time, though it did paint a more optimistic outlook in which economic activity is leveling out and where financial markets have improved. Still, the Fed was cautious about the fragility of that improvement, and with inflation expected to stay low, they gave no indication of an exit strategy to their zero interest rate policy. They did announce, however, that they will wind down the $300 billion program to buy long-term treasuries. The dollar-yen pair, as we saw with the euro-dollar pair, moved in favor of the greenback following the FOMC release, but then paired those gains. The dollar bounced up off a line of support at 95.15, with today's high as 61.8% retracement of the pair's most recent down move. The low was also the area where the dollar was prior to its better-than-expected non-farm payroll release last week, so it was a second opportunity for traders trying to go long that may have missed that initial jump. The greenback was pressured against higher yielders today, with the US dollar Canadian dollar sliding 200 pips to find support at 1.0850. Overnight, the pair's four-session rally peaked at the 1.1075 area. Higher stocks and oil prices increased risk appetite around the pair. Similar behavior was seen in the Aussie-US dollar pair, as the Aussie managed to pair most of its losses from yesterday and its slide from the first half of today's session. The 0.8450 level showed pretty stiff resistance, so we'll see if we test that level again soon. As you can see, there was a spike downward in the pair following the FOMC announcement, but any gains by the greenback were undone. In other fundamental news today, the UK economy shed 24,900 jobs in July, and the number of people seeking work in the 3 months through June rose 220,000 to 2.44 million, the most since 1995. The unemployment rate for those 3 months, meanwhile, climbed to 7.8%, the most since 1996. The labor market will continue to weigh on the UK economy, even as other measures like housing prices, services, and manufacturing begin to show signs of recovery. The Bank of England's quarterly inflation report also softened expectations for how fast inflation will rebound, dousing speculation of how fast the bank may move to raise interest rates. The bank's governor, Mervyn King, said it's likely that inflation will slow below 1% during the rest of 2009 and that the annual rate will stay below 2% until at least the end of 2012. The central bank sees deflationary risks and has responded by expanding their asset purchase program. The pound rose in today's trading against the dollar and yen, though the rally versus the yen was much more pronounced. Following a close to 700 pip slide in this pair the last 3 sessions, the pound found support at the 156 level and managed to counter-rally almost 350 pips. That level of support was a 76.4% retracement of the recent rally in this pair from July 29th to August 7th, while today's resistance came in at around the 38.2% retracement of the same Fibonacci levels. The U.S. trade deficit increased in June to $27 billion from $26 billion in May, which had been the lowest trade deficit in a decade. Exports were up for a second straight month, though the balance widened as imports increased by more, pushed up by higher costs for oil. The trade gap did widen less than forecasts, and with demand for U.S. exports returning, it's a sign that the global recession is bottoming out. Tonight, look out for manufacturing PMI data from New Zealand, while overnight, Germany and the Eurozone will post their preliminary versions of second quarter GDP. Tomorrow, the U.S. will release data on retail sales, import prices, business inventories, and weekly jobless claims. And that wraps up today's coverage of the Forex market. Thank you for joining us here at CMSFX.com, and happy trading.